This is going to be really useful for when we send a tractor to Mars and mow the grass. Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of April 5th, 2021. Just a reminder, I am not a financial professional. All information on this video is for entertainment purposes only. There we have it. We finally had a green week. Yes! Oh, it felt so good. It was on a short week. Good Friday was Friday, so there was no trading. I hope everybody enjoys a wonderful Easter holiday. Happy Easter. The stock market gave us a lovely Easter gift. The S&P 500 hit all-time highs. The Boomer Jones Industrial Index also hit all-time highs. The NASDAQ Composite is still about 550 points off its all-time highs, but we are getting there. This is typically the way of things. The S&P ends up recovering first. The NASDAQ ends up taking a little more as the money kind of trickles down. Trickle-down economics. If you have small caps, they are probably not recovered yet. Remember, anytime there's a market correction, small caps are the first ones to suffer and the last ones to rebound. Typically, the way things go, when entering a market correction, people pull money out of the most volatile stocks first, which is typically small caps. When they're ready for the market correction to be over, they start putting money back into the big stocks first, the safe bets. Small stocks will eventually get money back into them as soon as people start viewing the big stocks as overvalued again, which this wasn't a very big correction, so it shouldn't take too long. Let's get started with the news. Just a reminder, if you're new to the channel, I do publish my TA every single week. This is my practice. You can find it on the link below the video. First story. I did not want to cover this last week because it was still kind of developing. We didn't really see the fallout. And to be fair, it's not completely over yet. Tiger Cub, Archegos liquidation triggers record crash in Discovery Viacom CBS. Archegos was not actually a hedge fund. It was an investment office operated by its CEO, Bill Hwang. Bill Hwang had previously been in trouble for other violations on some shady investment practices, but he still had about $200 million, and he ended up using that $200 million and leveraging it substantially over the last 8 years or so with Archegos Capital. During his levered investments, he ended up borrowing much more money than he had. Estimates right now are putting him at being levered from 5 to 8 times his actual capital. So something triggered it. We're still not exactly sure what the trigger was, but the banks started margin calling him, asking for the money. Money wasn't there because he was substantially over levered, and there were these huge block sells of trades initiated by the investment firms to get back their money since Bill Hwang didn't have it. That's why you saw the share prices tank for Viacom CBS, for Discovery, for some other companies last week. So far, we know that there's about 5 prime brokers that are associated with this: Goldman Sachs, Morgan Stanley, Deutsche Bank, Nomura Capital, and Credit Suisse. The last of those two, Nomura Capital and Credit Suisse, seem to have been hit the hardest by this. Credit Suisse mentioned that they were going to be losing about $2 billion on this. Investment banking has not been very profitable for a while. It's been operating on low margins. So that amount of loss is going to end up being years worth of returns for them, years worth of gains. Just by lending money to one rather unscrupulous gentleman, these banks ended up losing years worth of gains. If you want to learn more about what happened here, I would strongly suggest you go to Patrick Boyle's YouTube channel. Patrick Boyle is an actual economist. He has a PhD. He runs a YouTube channel. Love his channel. It's actually my favorite finance channel on YouTube. He has a really wonderful way of explaining things, and he uses some really dry humor to get across his points. So it's a very fun watch. He posted a video on March 31st called Archegos Capital Blow Up, Bill Hwang's Margin Call. Next up, we have ARK Invest. Finally, we have our space ETF. We can finally go into space. I'm so excited. I was so excited until I saw the holdings in this ETF. Then I was less than excited. Let's go down the list. 3D printing ETF. Print is an ETF that's run by ARK Invest. ARK Invest's second largest holding in their space ETF is their print ETF at 6% of the ETF. ARK's the best, and ARK wants you to know that ARK's the best. Yo dog, I heard you like ARK, so I put some ARK in your ARK so you can ARK while you ARK. Lockheed, Boeing, Spirit Aerosystems. This is basically just a defense ETF, apparently. Here's one of my favorites. Deere, John Deere tractors. This is going to be really useful for when we send a tractor to Mars and mow the grass. We've got Amazon, Google, of course, Virgin Galactic. I was actually expecting this one. Airbus, Netflix, fantastic. I'm assuming this one got included for, I got nothing. I don't know why Netflix is here. Why is Workhorse in here? I don't know. XLNX is an interesting one. XLNX is an FPGA company, field programmable gate array. And these are semiconductors that work very, very well with AI and machine learning because they're capable of being tailored to handle the types of information that are needed for them. Last week on SPAC Week, I actually covered my FPGA SPAC, ARKX Semiconductors merging with ACEV. XLNX is being purchased by AMD. That's going to leave ARKX as the only publicly traded FPGA company that specifically focuses on FPGAs. So I can't help but wonder, now that I've seen XLNX here, but AMD is not here, ARK is going to actually add ARKX into this ETF once XLNX merges with AMD. We don't know for sure if AMD and XLNX are merging. The meeting of stockholders is going to be on April 7th, 2021, so it's actually going to be this week. The AMD and XLNX boards of directors each unanimously recommended that their respective stockholders vote for the proposed acquisition. The board of directors want the merger to go forward. ARKX, it started trading on March 30th. It opened at $20.50 a share, went as high as $20.61. Each day, you could actually almost see the tiers of trading each day where it moved forward. 30th, at the end of the day, it closed at $20.30. The next day, March 31st, opened at $20.44. At the end of the day, closed at $20.57. Then the day after that, we actually went as high as 21. We closed at $20.91 with $21.04 after hours. This has effectively gained about 25 cents a day. While that doesn't seem like a whole heck of a lot for an ETF, especially one that doesn't have a lot of the holdings that people expected to see, this is really good. Next up, we have Microsoft winning the US Army contract for augmented reality headsets worth up to $21.9 billion over 10 years. So Microsoft will deliver the US Army more than 120,000 devices based on its HoloLens augmented reality headset. This also comes a year and a half after Microsoft won a cloud contract from the Pentagon that could be worth $10 billion. Now, I know Microsoft is a $1 trillion+ market cap company, but still, getting these types of contracts with the US government, with the Army, with the Pentagon is really wonderful because the US government, once they start using a contractor, typically they're willing to pay premium for the services and they don't just randomly cancel the contracts. So once they're awarded, this is really a sure thing. Now let's take a look at Microsoft's chart to see what that announcement did from the Army. On March 31st at 3:30, this is when the announcement was made. I think it was made at 3 o'clock Eastern time. Just on the announcement, we had a 1.19% increase on the stock value from about 234 up to about 239. After that, we had a little bit of a sell-off at the end of the day. People were thinking that it was hype driven. And then the next day, everybody realized how good the contract actually was as more details were officially released. And we had another 2.49% gain on the stock. And we've been slowly increasing from there up to 242.50 after hours. We have Microsoft going up over 3% just on the news of the contract with the US Army. Coinbase, the largest US cryptocurrency exchange, is reportedly scheduled for a direct listing beginning on April 14th. In an amended S1 filing with the SEC, Coinbase said it planned to sell 114.9 million shares at its direct listing. The company, via the direct listing, could be valued more than $100 billion. It's going to list with the ticker COIN, COIN. I love the fact that the company is going public through a direct listing instead of an IPO. The reason for that is that a direct listing is more accessible to more people than an IPO. With an IPO, an underwriter is going to be selling shares or contacting institutional investors to buy block shares first, to buy huge amounts of shares before the retail investors could even get to it. But with a direct offering, institutional and retail are on the same playing field. This makes typically the first day more volatile, but it also enables retail investors to get in on literally the ground floor. The first company to use this DPO type of listing was Ben & Jerry's back in 1984, but more recently we've had Palantir, Asana, Slack, Spotify, even Roblox just DPO'd. This is really cool, especially when you consider the whole concept of cryptocurrency is like decentralization, moving away from financial norms. So Coinbase is moving away from the financial norm that gives all of the institutions the advantage on IPO and instead puts the advantage equally among everybody. So from a philosophical point of view, I love that Coinbase is doing a DPO here. Next up, we've got our jobs report update. Vaccines, fiscal stimulus, power US employment, economy blooming. Oh, what a nice springtime word. The US economy created the most jobs in 7 months in March as more Americans got vaccinated and the government doled out additional pandemic relief money. Then we have a hilarious quote here. The best first 2 months of employment growth of any administration in history suggested the labor market has finally turned the corner. Wonderful, wonderful. The best 2 months of growth of any administration in history. This sounds like something the Trump administration would have said. I'm the best. I mean, think about the parameters outside the administration's control. We've got a pandemic that's winding up. The vaccine was done before the administration started. The administration just took over as the vaccine was finished and ready to be administered. They're like, oh, it's the best of any administration in history. Good job. Good job, guys. Way to sound like your predecessors. Non-farm payrolls surged by 916,000 jobs last month, the biggest gain since last August. Data for February was revised higher to show 468,000 jobs created instead of the previously reported 379,000. Still, employment remains 8.4 million jobs below its peak in 2020. Jokes aside, this is good. We ended up beating estimates significantly, almost 100,000 over estimates. And as we've covered for the last couple weeks, the Fed is using employment benchmarks as the way to determine if the economy is recovering or not. You'll notice here it says non-farm payrolls. We see that all the time when we're looking at jobs reports, non-farm payrolls, non-farm payrolls. A lot of people don't actually understand why non-farm payrolls are the metric that's used for this. Non-farm payrolls are used because, quite simply, farming is seasonal. So the jobs are seasonal and farming has a tendency to use undocumented workers. I know that's a sensitive spot in America, but undocumented workers make up a large percent of the workers that are helping on the farms. This measure from the Bureau of Labor Statistics accounts for about 80% of the workers who contribute to GDP. So non-farm payroll is a measure of the majority of the population. It does not include farm employees, private household employees, unpaid volunteers. Unpaid volunteers. That's a really, really nice way to say migrant workers or unregistered persons who accept cash for payment. The unincorporated self-employed. Next up, we have another contract for a company that I'm invested in. Palantir ended up getting a $90 million contract with the National Nuclear Security Administration from the Department of Energy. This is a really cool website, by the way, govtribe.com, and it lists all the information for the federal contracts that are awarded to different companies. So you can see the dollars obligated, current value, completion date, potential value. So this is a $90 million potential value contract. And like we said earlier with Microsoft, once the government awards a contract, it's really, really hard for them to cancel it. So as long as Palantir does what they keep doing, and they're already contracted with other departments anyway, so this is just adding one to the picture, this $90 million is going to Palantir. Last little bit of fun news. This is from TMZ. Ordinarily, I wouldn't cover anything from TMZ on my channel, obviously, but it's about Robinhood. Ice Cube, the rapper, is suing Robinhood because they used his picture right here. So that Robinhood Snacks, which is like their morning emailer, they used Ice Cube's picture from a movie and the caption, "Correct yourself before you wreck yourself," instead of "check yourself before you wreck yourself." Right. Ice Cube says Robinhood exhibited a lack of respect for the law. Ice Cube did not license his image or his lyrics to be printed next to the picture. Robinhood responded, they didn't use his image without permission. The image was licensed and used for non-commercial editorial purposes in connection with the blog article. Doesn't matter. Ice Cube is taking them to court. Ice Cube went as far as saying Robinhood is the antithesis of everything that he stands for. And he refers to their products and services as horrible, going on to claim Robinhood has a habit of doing this, namely linking celebs and other rappers like Jay-Z and Nas to endorse its product and services, but Ice Cube makes clear he wants no part of that. This is really nothing, but with Robinhood IPOing soon-ish, this is just more bad press for them, especially after the GameStop situation. Last story I want to cover before earnings is the ABCL earnings report. Now, you guys remember that I talked about them having low revenue and being way overvalued in their PE last week, and I ended up buying some puts on them on Monday. And I told you that I was going to play those really close to the vest and kind of sell out at 15 to 20% gain. Here we go. I hit 3 weeks in a row. Nike, KB Home, and ABCL. Even though their earnings report had a revenue beat, Monday still declined. If we take a look at the ABCL chart here and we go back to Monday's date, you could see the day opened at 25.27, which is when I bought the puts. And throughout the day, we ended up dropping as low as 23.20. So I ended up selling out on this at like a 55% gain. But remember, when you're playing options, you can't be greedy. If you didn't sell out on Monday, chances are you got burned on this option because the revenue was a beat on Monday night. They released their earnings report on Monday night, and the next day we opened at 27.52. Overnight, we had a gain of over $4, which probably put your puts like worthless. Over the week, it ended up kind of increasing even more over the next 2 days before falling off. This is their earnings report. They reported a total revenue of $233 million in 2020, which was up 1,908% year on year. Remember, we saw the previous year, their total revenue was $3 million. So 3 to 203, that's a pretty big gain. And their EPS was actually a miss. But in normal business speak, they didn't report that their EPS was a miss. They just said it's better than last year. On their earnings report, their actual EPS, they're reporting a 37-cent EPS here, but on the earnings report here, they're saying 45% diluted. So not sure what that difference is about, but it was a miss by 38 cents. That's not really close off the expectations. The revenue in the report was great. The earnings themselves suck. It's not always about looking at revenue because revenue is just what you're getting from your customers, but earnings are going to be like the net income for the company, the profits that they're taking in. So even though ABCL made more money from their customers, they actually profited much less than expected. If you go to their website, you can actually find the fiscal year 2020 earnings and results, and you can listen to the webcast. I did that, but also on Seeking Alpha, they have a transcript. So you could just go to Seeking Alpha and find a transcript of everything that was said. I'll save you guys the time. The main takeaway here from the transcript is that the analysts in the Q&A session are a little bit concerned because out of that 200+ million revenue that they made in 2020, about 90+% of that came from one contract with Eli Lilly. Since the contract with Eli Lilly was for developing a COVID-19 vaccine, and COVID-19 is not going to be something that happens every year, the analysts feel as though the company's revenue is going to drop off next year. They are going to be disappointing, and you see a lot of the analysts actually downgraded their price expectations for ABCL. This is the news release. This is back from last March 2020, a year ago. ABCL and Eli Lilly to co-develop antibody therapies for the treatment of COVID-19. This was a huge contract for ABCL. Eli Lilly was trying something different using ABCL's platform to develop the treatment. After the earnings report, even though the revenue was much higher, the analysts were not very satisfied with the question and answers that the company was providing. And you could see most of them dropped their price targets by about 5%. So they missed on EPS, beat on revenue. And now if you look at the analyst price targets, they're still higher than the current price of 30, but it's down like 45 to 55. So this doesn't actually do much for the PE of the company. It's still going to be absurdly high. Even though I love this company and I do want to invest in it, I'm still not going to do it. I think it is going to drop more. I think a lot of people really only looked at the raw revenue percent on 2020 at that impressive 1,908% gain figure, and they didn't bother looking at the fact that earnings were down. Earnings missed expectations by a lot. I think ABCL is going to end up dropping more. I'm happy that my put made money on one day, but I'm going to wait before I do anything else with this company. Let's take a look at earnings upcoming. It is going to be a very boring week. Coming off the holiday, there's not much happening Monday. Tuesday before open, we've got paychecks, employer payroll. So this is one of those kind of broad market. You look at it to see how the employment industry is doing. With employment rebounding, I would expect to see paychecks rebounding also. Wednesday before open, we have Schnitzer Steel, which is a steel recycler, a metal recycler, scrap metal. Thursday, we have WD-40, which is one of the most ridiculously high stock prices for a single product. WD-40 fixes everything. What's the old adage? If it moves and it's not supposed to, use duct tape. If it doesn't move and it is supposed to, use WD-40. I like that Levi's jeans is coming in right after WD-40. I mean, those two, they go right together. Not much to really follow this week for earnings. For my options play for this week, I'm going to give myself a little bit of a heat check. I've hit on my Nike calls, my KB Home calls, my ABCL put, and I'm going to do a call for Schnitzer Steel. Here's their website. You could see they're just recyclers. Current share price $42.78. Steel is at an all-time high. This is steel rebar. We could just zoom out, go to 5 years. We could see that steel is at an all-time high. When commodities are at all-time highs, people look for alternatives, and one alternative is recycled steel. I would expect Schnitzer to be reporting really incredible earnings this quarter, and I think with the positivity about infrastructure in general with Biden's bill, this has the possibility to not explode upward, but to move upward more than people expect. Going back to the beginning of November, you could see we were pretty flat here around $20. We are up to $42.78, so we've doubled in that time. Worth noting, this is a risky option because after earnings, historically the company dips, and this one rose up before earnings and then dipped back down afterwards. If you look at the financials, that one where it rose up and dipped afterwards, that was actually their best earnings report. They had a 21% revenue increase. Their net income was $15 million, which was 3 times the quarter before. That was their best earnings report, and the stock price still dipped. My point, though, is that that best earning report came when steel was close to the all-time high that it is right now, and it's even higher at this point. So the scrap metal process hasn't changed any, but the company is getting more for selling its scrap metal. My plan here is to look at the April or the May calls for Schnitzer Steel. If I buy the April ones, the April 16th, that's only 2 weeks away, so I'm going to want to buy them at the money. If I buy the May ones, then I'm going to buy them a little bit out of the money to the positive side. I'm going to judge this on Monday morning and see what looks good, but my goal is to either buy the $41 at the money calls for April 16th or buy about $44 calls for May. As always with these options, you babysit them, you don't hold them until expiration, and as soon as you hit your target percent, cut it. Get rid of it, don't hold it. This week, I think I'm going to be shooting for about 25%. This is a little bit of a long shot, but we're going to see how I do. All right, everybody, that's it for the news and earnings this week. I hope you enjoyed the video. I am going to be releasing a DD video this week. It should be up at 9:45 Eastern time Monday morning. This is going to be going back to a normal DD format. I had a request from one of my viewers to rank my SPACs in the order of my favorite to my least favorite out of the ones that I covered last week for SPAC week. Well, I hate to break it to you, but they're all my favorite. I'm invested in them. But if I did have to rank them from like best bet to worst bet, I suppose, I would put Microvast number 1, Rocket Lab number 2, Acronix number 3, Nerdy number 4, Markforged number 5. Hope you enjoyed SPAC week last week. If you're new to investing and you want to support my channel, go ahead and check out my Webull referral link below the video. If you use that link, sign up for an account, deposit $100, you get a free stock, I get a free stock, everybody wins because I'm partnering with Webull. The free stock I'm getting is worth $30 or higher, so thank you in advance. Also, if you enjoyed the video, please like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, thanks a lot. See you later.